I'm Scarlett Fu. This is Bloomberg ETF-IQ, where we focus on the access, risks, and rewards offered by exchange-traded funds. Well, let's bring in Blake Spencer, Managing Director of Business Development at the Pinnacle Financial Group, and Vildana Heinrich, a cross-asset reporter for Bloomberg News. Blake, let me start with you. Thanks for joining us.
Thank you.
Eric showed us the push into havens like treasuries. Does it match what you're seeing on the ground, and how are you positioning within fixed income?
Well, with a lot of the negative yielding debt out there to the tune of $17 trillion globally, that money has to find a home at some point. And for us, it's about finding the next best place without overexposing people to equity markets and increasing their volatility. So for us, a play that we have is FPE, which is First Trust Preferreds. It's actively managed, low correlation to other asset classes, and is producing a 30-day 4.5 yield at this point.
Yeah, I mean, my take, look, if you take ETFs and index funds out of the equation, I still think people are going to own Amazon and Apple just through active mutual funds. So I don't agree, but you own ETFs. You own them for clients and their retirement. So What do you think when you hear these kind of concerns come out from these reputable sources?
It is concerning, and that's why we focus more on an active, and not so in line with the passive. Or if we're doing passive, we approach with an active strategy around the passive. So, a few of our plays outside the passive bubble, something you said, IYC, it's the consumer services ETF. It's more in line with the consumer confidence index is at a 19-year high, and with them and consumers being 70% of GDP, it really makes sense for us.
Right, and that's what everyone keeps citing about the U.S., how the U.S. consumer is strong.
And Blake, look, international, obviously, that's where a lot of the not great headlines are coming out of.
Right.
How do you position for that? Are you mostly in U.S.? Have you been taking money out of your international
No, not necessarily. Our overall exposure on international is minimal, mostly. So the effects of the last 30, 60 days haven't really affected us that much. So we're staying the course. There's no reason to react and get out.
What would prompt you to put more money into international?
Maybe just
sigh.
a rhetoric. It's tough, and no one has a crystal ball, and it's just something that we'll know when we know, I guess, right?
Yeah, and just I got to ask. I met you actually at an ARK event with Cathie Wood.
Right.
You guys are big investors in ARK ETFs. If you look at Twitter, she gets beat up pretty badly because of her Tesla calls. As an investor in her funds, you're hanging in there. Does the Tesla call bother you? Are you just about the returns? Talk about being an investor in her funds.
With Cathie, look, she puts her money where her mouth is, and she's very open and honest about how she feels, and I respect that. And look, you can't argue with the technology and the companies that she's backing, that they're investing their money in. CRISPR technology, other technologies that they're on the forefront of. You really can't argue with it.
Blake Spencer of the Pinnacle Financial Group, thank you so much.